First up, we have Tony Ottaviano, the Managing Director and CEO of Liontown Resources. Prior to joining Liontown, Tony held senior executive roles with two of the world's largest mining companies, BHP and Rio Tinto, and has led across the mining value chain from strategy to operations. Mr. Ottaviano joined Liontown as MD and CEO in 2021 and oversaw the delivery of the DFS for Kathleen Valley Lithium Project, the execution of foundational offtake agreements, and a final investment decision clearing the way for construction. Liontown has transitioned from a junior explorer to one of the largest lithium producers globally and Australia's first underground lithium mine. Thanks, Tony.
Thanks, Cameron, and good to see we've got a few true believers in the audience. I wore my gold tie specifically because I was hoping to get some gold magic onto the lithium price. Let's see. So thanks for Canaccord and Diggers to have me present today. I will start with the customary disclaimer and important information, and then I'll move to our strategy. And this has been consistently our strategy for well past 3 years. And the beauty about strategy is it's got to be enduring through the cycle, and ours is, and it's got to be consistent, and especially you've got to execute against it. And that's exactly what we're doing. At the moment, the focus is very much on the first horizon, which is bringing Kathleen Valley to its full potential. And most of my presentation today will be centred around the Kathleen Valley operation. But we are not losing sight of Horizon 2 and especially Horizon 3. We'll start with the market. We have seen developments in the recent times where government policy is starting to intervene, and very senior members of the Chinese government concerned about overcapacity and this propensity for Chinese economy to overbuild. And they're calling it involution. And it's not just a passing or a market speculation. There is tangible action being put together by the central government to control this relentless push for overcapacity. So we'll see how that plays out. If we move to the demand side, what encourages me about this particular graph is the movement of Europe and, more importantly, the movement of the rest of the world. Everyone seems to get fixated about North America. Yes, it is subdued. Yes, government policy in that jurisdiction is creating headwinds. But frankly, it doesn't represent the overall market. You're seeing movement in these countries and the rest of the world which have populations greater than the United States, Brazil, Mexico. So we're encouraged by when we see this sort of 20% plus growth annually coming from our demand. And then we move to energy storage. What we're predicting is, as the future pans out, by 2029, you can see from this graph, 1 in every 4 lithium units will direct themselves into energy storage. We believe the market continues to underestimate the demand coming from this sector. What have we achieved since last Diggers? And it's been a full dance card. Our first shipment to our customer, LG, in September 2024. We then had to pivot as the market started to decline and revise our entire strategy around our mine plan, and we did that. We instigated a fairly aggressive business optimisation program, and we delivered $112 million worth of savings and deferred costings. We started production in our underground on schedule in April 2025. We received the government assistance package from the WA government, and we thanked them for that. It was well timed and well considered. We commissioned Australia's largest paste plant on schedule, 4 million tonnes per annum of paste fill capacity. And finally, we released our full year results. It actually wasn't full year, it was 11 months, 6 of which were ramp up, and we had 5 months to try and glean as much operational data as we could so that we can manage the next 12 months, which we're calling our transition year, FY26. And I'll talk a little bit about that in a minute. ESG. I've titled this lead-in, The Real Economics. Whilst we believe that it's the right thing to do, it also makes good economic sense. Let's look at power. Until recently, we had the largest hybrid renewable power station in Australia at 95 megawatts with our partners Zenith. And we did that because it made economic sense. We've got a very, very competitive energy price. And if Zenith in the audience, not competitive enough. But when you compare it with the alternative, a fossil-fueled power station, we have the benefit of consistent power, given 80% of it is renewable. We're not exposed to the variances of the fossil fuel price changes. But another hidden sleeper of benefit is because we were able to minimise our carbon emissions to less than 100,000 tonnes a year, we could accelerate the approvals timeline, meaning that our first tonnes to market were earlier than otherwise would have been the case. Now, in retrospect, maybe I should have taken a longer timeline for first production, but it is what it is. We hurt less people than we did last year, but that's still not good enough. And safety is an ever-consistent journey for all mining companies. We've got strong community and traditional owner relationships. 2 contracts that we awarded to Jawal are probably one of the largest Aboriginal contracts in the goldfields. We're very proud of that fact, and we continue to work on our partnership with Jawal. Here's a snapshot of our last 11 months. 321,000 tonnes of spodumene production in 11 months. We're very proud of that fact. There are many of our competitors that took a lot longer to get to that figure. We sold 280-odd thousand tonnes of product to our key customers and the spot market. We achieved a 58% recovery figure, but that's including 6 months of ramp-up. And there were times when we were, which is very much ore related, there were times when we fed underground ore to it for a month, we achieved well over 70% recoveries. We have confidence in this processing plant. And you can see that with the plant availability. In a ramp-up year, we exceeded 89%, and at times in the last quarter, 93% availability. That's uptime available for utilisation. If we look at the financial metrics, again, $300 million of revenue in our first year, an operating cost of 802 in a ramp-up year, and we're one of the only lithium companies that disclose all-in sustaining, and we've got an all-in sustaining of just over 1,000 Australian on a 5.2 basis. Sorry, the most important point on that is a cash balance at the end of the year of 156 million. Where does it start? It starts with a world-class ore body, and we have that at Kathleen Valley. What you see in front of you here is our Mount Mann deposit. We have 2 ore bodies there, Northwest Flats and Mount Mann. We've put the Northwest Flats on hold as we pivoted in November, and now the focus is on Mount Mann. This is a bulk tonnes operation. Now, we focused in November on high margin. We specifically chose those words, not high grading, as some of the hedge funds want to put out in the market. You can see from the colour coding, there is a nice balance of grade through that next 5-year plan. And those rectangles don't do it justice. Some of the stopes there are north of 80 to 100,000 tonnes of ore. A small stope for us is 12 to 15,000 tonnes, and I'll speak about that in a minute. But what you see in front of you is the 5-year plan, and then there's another 5 years underneath that that we're well and truly advanced in our planning, and then there's a further 5 to 6 years under that. What are the key enablers? We put them into position well before we needed them. Firstly, we're seeing excellent ground conditions, consistent with our DFS work. We're getting good fragmentation. We got told that it couldn't be done. You couldn't mine lithium underground. The rocks would be as big as boulders. You wouldn't be able to move them. Well, we've proven all that wrong. So far, things have been consistent with our thinking and our planning. We've put all our enabling infrastructure in place before we needed it. A 4 million tonne paste plant, the largest in Australia, and we've got all our ventilation, as you can see on the drawing, or on the picture in front of you, producing 11,000 cubic metres, or 1,100 cubic metres a second. This mine, given its bulk tonnes and its large stopes, we can defray our fixed costs from our underground mining operations over greater tonnes. That's why we have confidence on two fronts. We can deliver within our cost targets, and we can deliver the ramp-up. We already are, after 3 months, at 500,000 tonnes per annum. We're going to progressively move to 1 million and then 1.5 million, and I can talk about that in a slide to come. Where is all the magic? Well, this diagram tells you this. If you look at RL 260, from that level alone, we can deliver more than 3 million tonnes of annual production from one level. And it comes down to tonnes per vertical metre, which at those levels is over 125,000, and the size of the stopes. Again, I cannot reinforce the power that this delivers us in terms of getting our unit costs where they need to be. Now we shift from the underground, the mining, to the other side of the equation, which is the processing plant. We're very proud that this plant is overachieved. It is produced where we think it should have produced, but more importantly, it has illustrated to us how adaptable and flexible it is to tolerate the vagrancies of mill feed quality. What kills you in lithium is contamination. Dilution needs to be kept to a minimum. The host rock has a similar SG to the primary ore body, and therefore it's difficult to float with high levels of contamination. What our plant has been able to demonstrate is the design limit for most of these plants is less than 5% contamination. We are producing saleable con at well above that, to the tune of 15 to 20% dilution. So if we get dilution in the underground, which we don't expect because we believe this is an open pit issue more than it is an underground, then if at 5 or 6% dilution underground, we don't care. Given those size of stopes, it will be diluted. But we're not just standing and sitting there and waiting for this plant to deliver more. We're investing. As we learn more, we understand where the constraints are, where the bottlenecks are, and we invest really targeted capital, because that's all we can afford, and ensure to unlock more capability. And these are two examples. We do that through our ability to put on-stream particle analysing to size distribution. We get that in real time, and then mill control, which most plants have, but we believe is a first in lithium. What do we plan to do for Diggers 2026? Well, it's going to be another full dance card. We're going to start by finishing the underground infrastructure. We've got a major suite of shutdowns which are planned as part of the first quarter. We've got a mill reline which was just completed. There's some more work to be done to the dry plant. So the first quarter is really setting ourselves up for the rest of the year in terms of planned maintenance. Then we're going to deploy the technology I've just spoken about. Then we'll complete the open pit by the end of December on schedule. And then we'll rely on our strategic stockpiles that we've planned since the feasibility study. And as we ramp up the underground, those strategic stockpiles will come into play. And finally, we'll be 100% underground mill feed by Q1 FY27. I've got a slide on that too. And here it is. You can see this is a sort of tale of two halves. The first half is very much processing that low-grade stockpile and getting it through the plant so that we can then set the plant up for 100% underground, which is higher grade, cleaner, and we're expecting greater performance from the processing plant. And then ultimately, in FY27, will be 100% mill feed coming from the underground. And we will see, and we'll have to prove it, we understand that our competitive advantage will be the underground. Producing that quality of ore, the ore hygiene, will give us that edge in performance in the plant. Now, operating costs, and I've got a slide on guidance. I've spoken about this slide, and we can see from this, it's all about design for scale. We've got 2 declines. We're going to de-risk the ramp up by these high volume stopes, and ultimately we'll be able to amortise our fixed costs over more tonnes. And we can see the drop off in our unit operating costs in FY27. But lastly, we've left the optionality for expansion. We haven't torched the future. Should the market change, we're in a fantastic position with a low capital intensity expansion. We've got good debt, it's low cost, and it's flexible. And we've demonstrated that by a lot of debt being customer-led, because the customer's interests are aligned with us. This isn't project finance. There's no hedging, there's no covenants. It's very, very flexible. And some of the interest rates, I don't think you can get a home loan at those rates. Finally, just to wrap up, it's a high quality deposit. We've demonstrated our operational capability in 5 months, but we continue to do so. We're well positioned for the recovery in the lithium prices, given our upside optionality. We've got a rapid expansion from 2.8 to 4, given a lot of the infrastructure is already designed for 4. And finally, we've got that optionality around the second horizon with 2 strategic partnerships, one with LG Energy Solution and the other one with Sumitomo. Finally, this is our sort of signature video. It's customary for us to show one. I'd like to share with you our Kathleen Valley.
It's been just over a year since we kicked off production at Kathleen Valley. In less than 6 months, we ramped up the plant and hit commercial production, powered by renewables from the start. We also commissioned and started producing tantalum, with customer deliveries regularly leaving site. While remaining focused on business optimisation, we've rolled out a suite of projects to lift recoveries, enhance technology, support sustainability and expand the TSF to deliver strong production results.
We've made history as Australia's first underground lithium mine, hitting high development rates and commencing underground production on schedule. So what's next? We're laser focused on hitting our production schedule. The underground fleet is increasing. We're dialing in the largest paste plant in Australia, and we're building our tech team to support the ramp up.
Thanks everyone. I'll leave you with this picture.